Okay, good. So hello everyone, my name is Lauris. I'm from IIZI Brokers, insurance brokers. We're a quite large broking company in the Baltics. We do all sorts of insurances, but of course today we are here to talk about something more specific, cyber insurance to be exact. And yes, to have some expertise, of course, we have invited a person from a company that has been doing cyber insurance for already 16 years. It's a new stuff here in the Baltics, but in USA and Europe, it's quite common. So, David,
So hi, just quickly. My name is David Dickson. I work at a Lloyd's broker in London called Safeonline. As Reece has been saying, we've been providing technology and cyber insurances to some of the world's largest companies for 16 years now. And with legislation change on the horizon in Europe, this is something which European companies are going to have to take notice of in the near future. So this will be a short, sharp introduction to cyber insurance.
And yes, about what's coming up. So first I'm going to talk a bit about the background of the risk, then David will take over about insurance part. So yes, when you talk about cyber risk, it's probably multiple things that come into your mind. What does it contain? And the whole basis of it is of course the data, because we have a lot more data now than we had before. There is a research that says that at least 90% of the data we have now was created just like in the last 2 years, because of course now your refrigerator probably keeps all the information about the products in it. And of course by 2020 there will be a lot more data. And with a lot more data that can be both funny, like just some things that people speak about in Twitter, to some important stuff like weather forecasts that are quite valuable to different companies. There's also comes some data breaches and some situations that has happened with all sorts of data and all sorts of companies. And when you look at the data, like this basic slip about David, which is of course his generic password he uses everywhere. And yeah, this is the information every company probably keeps about its employees or clients, or yeah. And the funny thing is that this data gets really valuable when it gets lost, and because for different types of data there's a different value. And yeah, and with so much data around, it's quite easy to lose something. Well, if there are 200 million of emails sent around, you just mistype the email and send some confidential document to somewhere. Or you just lose your smartphone with some client contracts on it. So this all can cause serious liability issues and problems and risks. So yeah, maybe
So
add something.
So the important thing for us here is that, and you've heard it downstairs, I think just now as well, that cyber risk covers a whole multitude of entries, basically. It's not just a malicious system, external kind of arbitrator. It can be internal operational risks as well. So actually when we look for the trigger of cyber losses, actually only 41% of it is malicious external or criminal attacks. And that includes everything from ransomware and extortion, which is on the rise, and I think there's talks about that later today, malware, hacking, all those kind of things. But when you dial it back and think actually the cyber risks, 30% of them are operational, everything from a rogue employee, a loss of documents or data. There's an anecdote which is used by some colleagues in London that if you think about how data used to be stored in filing cabinets, right? And so about 80 filing cabinets is about the equivalent of 1 gigabyte of data. So when you think about how many filing cabinets is on one iPhone, for example, that's 5,120 filing cabinets. So just the ease of production of data and the way we store it and the way we transfer it means that we're more exposed when it's lost. Now, if you did have a data breach, these are the kind of the costs you'd you'd have to come up with privately, unless you had the insurance, which I'll talk about in a second. Legal costs can be pretty expensive, up to 300 euros an hour. If you have to provide any call center costs as well, very expensive. The forensics, which is coming in, finding out the source of the breach, cutting it off and making sure that there's no further loss, also very expensive. With liabilities becoming more to the foray in terms of legislation changes, this means all these kind of costs are becoming more and more expensive to companies if handled privately. This is an interesting slide. This basically shows the average cost of a data breach for different industries, for different industries based on each item of data that is lost. So for example, let's say you're a healthcare provider, you have 10,000 customers, and you lose those 10,000 customers worth of data, that's 3.6 million that will cost you in terms of these costs here, if you handle it privately. Now, what does the insurance cover? There seems to be a bit of a distrust of insurance brokers in some parts of Europe, I think, probably including Latvia. Important thing for us is London is the centre of the world for cyber insurance. We have about 70 providers of the cover, which means it's very competitive, very broad wordings, and insurers will lose their license if they don't pay fair and reasonable claims. The insurance itself can be broadly pinned down to three, basically, areas of cover. The first is crisis and event management, and I think the last question for the last speaker was this kind of topic. What should happen in event of a data breach? Well, what happens with insurance is that there's a team, a specialist breach response team, is paid for by your premium, and they come in the same day of the breach. They'll provide all the costs for the network system and data restoration, any notification costs to clients whose data might have been lost, all the fraud, the extortion consultation as well as all the basic IT forensics, stopping yourself from any further losses. Reputation is probably one of the hardest things to measure as a result of a data breach. If you can link loss of income to reputation, then that's what also can be covered by this part of the insurance. The second is financial loss. This is business interruption. Let's say you're a manufacturer, the production of whatever you're making relies on a system and it goes down. That loss of that system downtime will lead to a loss of income, which is very, very straightforward, can be picked up by the insurance. Cyber theft and extortion, ransomware again, that's covered under this. Any fines and penalties were insurable by law, including payment card industry fines, they can be covered under this type of insurance. And then the liability to your customers. If you lose their data, you may be sued for breach of privacy or breach of security, but any breach of intellectual property, confidentiality and content liability as well. All legal expenses surrounding all of these issues above also covered under the insurance. The interesting thing here is that, especially for small companies, as I'll talk about in a second, is that it doesn't just cover you for your own liabilities, but also for the outsourced service providers that you work with. Luis, do you want to?
Yeah, and here's a short slide about why local insurance that you might have is probably not enough. Because if you look at your general property insurance or your general liability insurance your company has, you'll probably find some sort of clawback clause in the terms and conditions that relates either to data or hacker attacks or something. So universally, this is usually excluded. So you need a specific type of insurance that we are talking about to have such events covered.
So who's it for? There's a bit of a misconception actually worldwide about who cyber insurance is for. It's for someone online or for a technology company, but actually it's just not the point at all. Anyone relying on a network or a system to operate, anyone processing, storing or transferring data, and anyone with a presence online. So much so this encapsulates most companies now. I mean, to give an example, there are churches in the United States who buy cyber insurance. And that might sound absolutely crazy, but they have a list of a congregation, and that's personally identifiable information which they're liable for if they lose it. This kind of liability for losing the data and losing the information is going to become very, very important for European companies. And there's a general list there. As you see, we provide cyber insurance for everyone from lawyers to financial institutions to some of the world's largest gaming and gambling companies. This is an interesting website called Hackmageddon. And basically, just the purpose of this isn't to name and shame companies that have been breached, but just to emphasize my previous point about the range of companies that have breaches. Yahoo, obviously well known, probably one of the largest data breaches ever, but everything from banks there to newspapers to government entities to Twitter accounts. So yeah, who's it for? I touched on this a little bit earlier. When we look at the media and we see stories about data breaches, we're struck by the huge corporations, the Sonys, the eBays, the LinkedIns. We've all heard of them, and so there might be a misconception about this is only an issue for large companies. But hopefully, being at a tech conference and a cybersecurity conference, people will know this isn't the case. And in fact, actually, over 2/3 of attacks happen towards SME companies. When you bear in mind the financial and reputational damage that a data breach can have on an SME, it's vitally important that, twofold, that first of all, there's a business continuity plan, a disaster recovery plan in place, so they know exactly what to do in terms of in time of a data breach, but also that they have the insurance involved because it helps mitigate the cost of it rather than affecting their cash flow. This, again, hopefully you guys will agree here, it's not just a US exposure. In the US, there's quite strict legislation about the notification of data breaches to the data protection authorities and also to customers. This is something which is about to come into Europe. Lloyd's, which for those who don't know is the largest single insurance market in the world, based in London. They recently did a study on European companies, for 346 of them, and they found out that 92% have had a data breach in the last 5 years. I think it was the head of the FBI who famously said in 2012 that there's two types of companies: those who've had a data breach and then those who are about to have a data breach. So it's one of these things, if it's inevitable, no matter how good your system is, the insurance can help mitigate any further losses. Now, GDPR hopefully is something you're all aware of. 25th May 2018, there's a few things here which we should bear in mind. The biggest change probably is the mandatory notification of a data breach to your data protection authority within 72 hours. What the DPA will do, your local DPA will do, is they'll analyse the loss and work out there's been a fundamental breach of privacy. If there is, then there'll be massive liabilities for it, all covered by the insurance. Now, fines for this as well, up to 4% of global annual turnover or 20 million euros, which is quite staggering. To put this into perspective, there's a telecoms company in the UK called TalkTalk. They've just been fined by our Information Commissioner's Office for £400,000. If that was applied to the GDPR fines, that could have been well over 70 million. This is the part of the presentation which is probably the most important. As insurance people, we get lots of people coming up to us and say, I don't need insurance, I've got IT security systems. But this isn't the point. We're not trying to replace IT security with insurance. Instead, it should be part of your risk management procedure. These are the kind of costs you incur as a company, hopefully, in terms of your internal cyber risk management, your process, procedures, and policies, your incident response planning, and your specialist IT software. Covers a whole host of risks and can be quite expensive but worthwhile in terms of risk management. Now, these are the risks which if there was an issue, would be extra to the company, or your liabilities to third parties, your financial loss in terms of direct business interruption, extortion, some fines and penalties, and the increased cost of working, and all the management of a breach, which some companies will budget for or keep a large pot of cash on the side, just in case, and all the representation legally as well. All not covered by that initial cost of the cyber risk management. I think you know where this is going. Where does the insurance fit in here? Cyber insurance, for a fraction of the price of the risk management investment you've already made, can enable a company to properly budget for their entire cyber risk management program, providing cover and mitigation against reputational financial loss. The really important thing here is that we're really not trying to replace IT security. And cyber insurance, I think, probably whether we like it or not, I think we probably like it, will be well bought across Europe in the next 5 years, as it has already done in the States. I appreciate this is the graveyard shift just after London, just after lunch, sorry, but if there's any questions, we'd be happy to answer them.
Great question. have to get the microphone, please. I can bring it.
Sorry, thank you. Just a question really about the mechanics of a policy. There's a lot of skepticism out there about whether these policies actually work in practice. In your experience and in your opinion, what are the key things in terms of exclusions that we should be looking out for with these policies?
Yeah, very good question. A bugbear for cyber insurance brokers, I think, and something which underwriters have continued to try and implement in cyber policies, which has come over from a professional liability phase, is actually a retroactive date. And I think this is probably one of the largest causes of a claim being thrown out. And so I'll tell you how a retroactive date works. Cyber insurance policies are what we call claims-made policies. So you buy them over for a year period. And as long as you have a claim in that period, it should be picked up. But retroactive date, let's say you have a 2016 policy, but the cause of your loss started in 2014. If the retroactive date was for the beginning of 2016, that wouldn't be picked up. So what we're working on now, and which is quite generally happening, is removal of retroactive date, full retroactive cover. So if you buy cyber insurance now and you have a claim within that period, it doesn't matter when the threat or entrance to your system happened or occurred. In terms of other exclusions, this time 2 years ago, I'd say that cyber terrorism was generally excluded. That's something which we don't see anymore, and we actively try and include. And then other than that, things like bodily injury and property damage, not covered under cyber insurance at the moment, generally speaking. But the thing about cyber is that it's very fast, very dynamic, very quickly moving, and the benefit of using London insurers is that it's very flexible. So rather than an off-the-shelf policy from a local insurer, we can bespoke them to match the needs of the client.
I've got a follow-up, if that's all right, if no one else has got any questions. So I'm not being selfish here. When you were talking about retroactive dates and date of discovery, is that something that's common in cyber insurance as a whole, and the world of cyber, about something coming to light or an incident happening and it taking a while to discover? Is that
absolutely? Quite often you'll see that the gap between the cause of a breach and data discovery can be a huge amount of time. This is something that the insurance market is ready to work on now and help companies out with. One more question you have there?
I have a question regarding this continuously caused damage regarding the data loss. For example, if there is a lot of data lost, probably you will find it out very quickly. But if hacker uses his knowledge and gets some specific data, which is very, very valuable, and uses it during the time, is there some restrictions regarding the continuously made damages regarding the data loss?
So let me try and clarify.
So the main problem is that data which you get, you can use for something, yes,
yeah.
To gain some goods out of it.
Mm-hmm.
And of course, for someone it will cause some financial losses, yes, and it can continuously continue year by year, and don't know how long.
So in terms of business interruption loss, or you're talking in terms of reputational damage? Is that what we're talking about?
Just,
can you give me an example, perhaps, of what the company is?
For example, you get some access to accounts, yes, okay. And getting from there some specific amount of money that actually bank maybe don't recognize, or it's a big company's account and they also want to recognize. But during some time, this money which is taken out of there can be a very huge amount.
Yeah, so this will be an interesting thing here, because what we're talking about there might be a crime risk, if I'm completely honest, which will be ongoing. But what cyber wants to do, basically, is if you do have a breach, then they want to stop the breach as soon as possible and provide you with all the costs around with preventing any further loss. When it comes down to something like that, that's probably a crime risk, which is covered by a specific crime policy.
So it doesn't work on crime risks. If the third party got this data, then you just fix by managing this issue and close the system. And what you cover by this policy is actually what is this? This management and losses regarding this fixing the problem.
Yeah, exactly that. So, I mean, this is an instance of a data breach. The cyber insurance is there as a financial buffer to basically help you pay for it.
Okay, thank you.
Unless there's somebody else out there who wants to. Okay, to wrap it up, I have a couple of questions as well. First of all, one of the things, I think one of the reasons they had sort of no-fault insurance in the US was to sort of lessen the cases of insurance companies suing each other. Mm-hmm. Now, if I am living in a building that has a uniform security system, mm-hmm. With a database of everybody's password for getting into the building or getting into my apartment, and there's a breach, and all of these passwords are set to XXXX or something. Yeah. And the criminals in the neighborhood find this out very quickly, and mine and several other apartments are robbed. Now, I have homeowners insurance or apartment insurance, but they will look for the fundamental cause. Now, the fundamental cause is going to be a security breach at the security company. Mm-hmm. And they're going to have to pay for mine and 10 other people's, flat screen and laptop and whatever else was carried off. They're going to go after the company that's responsible. Mm-hmm. Are you going to be willing to accept that kind of liability when the homeowner's insurance comes and said, wait a minute, your guy's, nasty American word, it up, so therefore,
Sure. It's an interesting scenario. I think that would probably be, the contents insurance would surely pay for that. In terms of how the cyber insurance would respond is, in terms of, it would be any liabilities in terms of breach of privacy or breach of security. I'm not sure how far that would go in terms of replacing stolen items. What it might do is cover the insured's loss of their own assets, but perhaps not as far as, this is a very specific example. We might need to look into that kind of case-by-case basis, but it wouldn't necessarily be the intention straight away of this type of policy.
Yeah, but that was the sole cause. It wouldn't have happened if your insuree had not, had a breach of its security.
I think this would probably been something that the home insurers would have taken on board when they were providing the insurance for the contents. To be honest.
Yeah, but the home insurers are there with they've got 10,000 euro worth of stolen stuff in that building. What are they who's going to pay them back for it? But anyway, okay, the other thing is, obviously you're not going to sell me fire insurance if I have a habit of taking the barbecue inside and cooking in my apartment over an open fire, or doing other things, or I store explosives from my construction company in the basement in my garage, You're going to look at those risks. You're going to check my house out. Mm-hmm. To what extent do you go and enforce certain minimum or even certain stringent standards on your customer before you'll insure him?
They won't do any condition precedents anymore, really, in terms of you must be able to prove this happened to an extent. But what they will do, part of the application process, is ask you to basically evidence or confirm that you have minimum risk management procedures in place. Things like, do you update your antivirus? Do you update your firewalls? Do you have a business continuity plan, a disaster recovery plan? Do you encrypt mobile devices? Is there encryption on all your stored data? That kind of thing. They will ask for evidence of one.
Okay, so you will have to swear to a whole list of best practices.
Yeah, absolutely.
Before,
There's one of the things about cyber insurance, and it goes back to a point I made earlier, we're not trying to replace IT's internally systems. And to the point where actually if a company showed that they didn't have any basic risk management policies or procedures or IT security, then they probably wouldn't be allowed to get insurance.
Okay. I mean, it was the same way. Yeah. I mean, you would not insure somebody who, unless the customer said, I am not going to do any more cooking over an open coal fire indoors. I'm going to do it outdoors.
To put it in another metaphor, let's say you bought contents insurance for your house. the insurer wouldn't give you that contents insurance unless you had a lock on the door.
Exactly. Yeah.
Yeah.
Okay. Any further questions from the audience or anybody else? In that case, I will say thank you, and the next presenter from about satellites and stuff can slowly prepare. And I have a couple of things for you, gentlemen. Let me see. Yeah.